Hello everyone, future crypto millionaires. Today I want to tell you about a trading strategy that I personally use and that has become the most profitable in 2025. So you can take it right now, apply it, and make a huge amount of money. Buy yourself cool cars, live in awesome apartments, and so on. In other words, I'm sharing my strategy so you can earn a lot of money. And if we're talking about trades, let's take our first trade. Let's break down how we made it, using the example of the BDXN coin with a 1,500% gain. By the way, trade on the Wix exchange, the link is in the description. Go there and get a personal bonus from me of up to $500. BDXN token. We can see that this is quite a new project that launched in the summer of 2025. And with all such projects, we understand that they're new and have a small market cap. That means they're not heavyweights, and it's very easy to manipulate that. It crashed down, tried to grow a bit, but then some really harsh manipulations started happening. You can see these spikes up, spikes down, and sudden moves yourself. There was just a 300% pump of the project, and then it simply dropped 60% from its peak. So this is a very volatile and very high-risk instrument, but if you trade it, you need to know how to use it. Today, we actually made 1500% on that candle, and it's still falling. There's a chance it could go somewhere to 0.13. And a lot of people ask me, I don't understand, what are these charts? There are some candles there, and what am I supposed to do with them? How do I analyze them? How do I make money from this? So right now, I'll tell you about the strategy we used, which was super profitable in 2025. You can just use this strategy and trade strictly according to it, because this is my main strategy, and it's exactly the one I use myself. We can see that this project, BDXN for example, today, if we look, it's at 0.00, it has grown by 75% just today. And accordingly, when a project has already grown by 75%, there's no point in entering a long trade expecting further growth. Because at any moment here, again, we see how the coin is growing. And remember one thing. The market always works in such a way that the price is always moving. So we can take the price as an example. And the price is always moving. From liquidity to liquidity. Accordingly, let me just reveal a secret to you about how market makers operate. Here we have the price. If we look at the trend, there is an upward trend. 1. And we have the same thing to 4. Let's take a look a bit lower and figure out. Here there were 2. And here, let's take this upward trend. What does the market maker do here? You could extend it up to here, but we see that we have a clear channel in which we're growing. Everything is fine or moving up for a certain period of time. And then the market maker always knows that all traders will have their stop losses set just above this channel, always right up here at the top. And right here at the bottom, there will be a huge accumulation of stop losses, which in fact are taken as fees by the exchange. And the market maker sees that a nice little channel, a trend for trading, is forming. Everything is working perfectly. And then suddenly, boom, a stop hunt. This stop hunt is exactly from the market maker, who takes the stop losses of people who are right here. Why are these set here? Because here we had a strong level, you see, from which we bounced off several times already. These stop losses are taken out. Let's keep watching. If we add a strong level here, where else will stop losses be hidden? They will definitely be hidden behind this corridor right here. Everything matches up further. People who entered, for example, right here, will have their stop losses set here as well, because we can see that we also bounced off this zone several times. Let's keep watching. We will also have stop losses placed here, because we see accumulation, and there will also be stop losses set here. And we can see how. Right here, the stop losses were taken out, here as well, and these stop losses were simply spared and almost immediately bought back. All the long traders who were greedy here with high leverage got liquidated, then the price was bought back, and they were trapped. At this point, there were clearly a lot of short sellers. Then the price was pushed up a bit more, wiping out all the short positions where stop losses were set just above this level, right at the trend line. Here, people most likely started going long again because they saw the trend line being broken. There might be a sharp rise. like somewhere around here, and again, they drive the price down, taking out stop losses here and here. In other words, the market maker is always at work, and so is the price. You just need to understand how the price is formed in the market. The price is all about moving from one liquidity zone to another. As I mentioned, there was a lot of liquidity on the stop orders here, and here as well. And the market maker, he was just playing around here, taking out both sides. And here, exactly the same situation is forming. We see a relentless rise, with some corrections, but they're really insignificant. And when the asset has already grown by 75%, there's no point in going long anymore. It makes sense to wait for shorts. But for example, entering shorts here and getting stopped out on every one of these candles makes no sense. To find strong levels, as I've already told you, what do? We switch to a higher time frame. For example, here we have the daily time frame, and on it we look for what a strong level is. A strong level is one that the price has bounced off several times already. For example, let's look here and see that we have a strong level where the price has bounced off many times. And from it, the price does a retest, falls, consolidates here again, moves away, and then breaks through it. So this is quite a strong level, and we mark it. In this way, we continue to look for where there were strong reversals and strong accumulations. Just look at how perfectly everything lines up. So you need to understand that here we had an accumulation, which the price keeps testing. There are strong buyers here. We keep testing it and then go for a pullback. Next, there was a stop out on October 10th, but we won't count that too much. Pullback. Again, we test this level in Mendoya. And then you can see that there was also a slight reaction here. And here we hit this level precisely. We bounced off in my town. So on higher time frames, we look for these kinds of strong levels. Again, we can see that right here we had a huge amount of accumulation. That's also a strong level. And we draw these strong levels. Then we switch to a smaller time frame. And here we can actually see them. Look, I just drew them on the higher time frames, looked at the chart to the left, and now we can see that, well, here we can adjust them a bit. We can see how we approach these levels several times. And again, here we see that there was a drop, a small correction upward, and then another drop. Here we just broke through, and here we can see that there were pauses. This was an accumulation, and we broke through it, and quite impulsively, pretty quickly. Here we have it. And my goal was not to enter the market right away, but to watch how the price would behave. Because this candle could have just gone down here and then returned back into the accumulation to go further up, so that it's not just a fake out, but an actual move. I waited for this moment when the candle grew back a little bit. The next candle opens and I see that the decline continues. And I'm saying exactly that from 0.36, from this point here. Right from this accumulation, we watched and waited, and from here I'm saying that we can already go short. Our first target will be 0.34, then 0.2, and here 0.28. But I was already waiting for it much lower, and that's exactly what happened. We entered at the price. Well, here I have 0.37, the price is open, that's about it. Right here, and immediately we get a reaction to our first target. We take half off here and set the stop to break even, in case there's a rise, and that's it. And then the trade works out all the way to 0.2. So to sum up, what you need to learn is to learn how to find these more or less strong levels where the price accumulates and bounces off several times. And to trade from these levels, if you see that the price has approached once, twice, 3 times, 4 times, is accumulating, and then shoots upward, you can confidently go long from these levels you've marked until the next strong level. At the next strong level, you should partially take profits and set your stop either in profit or at break even. And you can keep holding the position further. This strategy is also called trading on level breakouts. In fact, for 2025 and what we do in our streams, this strategy has made the most money. It's actually quite simple to understand. Here, you just find the levels, watch the price movement, and then trade to get similar results. That's why I highly recommend studying it, testing it out, and seeing the results for yourself. I wish you big profits and fat trades, but don't forget to subscribe to this channel and to my Telegram channel as well.